Are stocks about to melt up or crash? All that and more on this equity edition of Sunday Night Charts. I'm your host, Steven Van Metre, and thanks for joining me today as we kick off with the S&P 500, taking a look at a breadth indicator, the percentage of S&P 500 stocks above their 50-day moving average, very bearish at 41.37%, and you can see this trend heading lower. Now, you'll note when it gets to these bottom points, you see this -2 standard deviation, they tend to get bought, but note how if it doesn't break through, you can come back here till late September and notice it came into a buying zone down here and shot up, but it got rejected and went lower. So right now you see it is getting rejected, potentially suggesting the S&P 500, at least in the short term, is going to roll over and retest its recent bottoms near the 4,300 range. Let's take a look at a longer look at this, at the percentage of S&P 500 stocks above their 200-day moving average. Now remember, when it's below its 200-day moving average, it's considered very bearish, and right now we're seeing about 51% of the S&P 500 stocks below their 200-day moving average, which is very bearish, saying they're in a bear market. And you can see a similar situation here. It came down to a -3 standard deviation on a one-year chart, came up and got rejected at the -2, suggesting that this is headed lower, but we don't have a lot of reference points because we don't have any. We have to go to a historical chart, and you can see that when it bounces up here and gets rejected, well, it tells us in the past it's likely to retest those lows before it comes out of this mode. So look for more equity weakness, at least based on the breadth indicators of the S&P 500. Let's move over to the RSI, or relative strength indicator. Going from an oversold position here in late January, bouncing up, but notice running into resistance here at the 50 range. And what you want to see is this: when this thing goes from oversold and up, you want to break through 50 and continue higher. When it gets rejected from an oversold position, we don't have a lot of examples. It's going to have one right here. When it gets rejected at that 50 mark and heads lower, well, that means equity prices are likely to head down. So right now, the picture is prices likely to come down. How about the MACD? We have a positive crossover on this moving average signal here, where you see a shorter term moving average crosses through a slightly longer moving average, and when that does cross, it generally signals a bottom. But is it strong enough to pull the rest of the market with it? Well, I don't know. The other two indicators say no. How about Momentum Timer Pro, which still remains free? I'll put a link up in the corner. There's one in the description. You can sign up. Your first issue will come on Monday, and well, it's got a lot of sell signals except for one on Thursday here showing a buy, so not a lot of confidence from Momentum Timer Pro. So out of 3 signals, 2 of them are saying prices are probably headed lower. Let's take a look at the moving averages now and see, is there a positive trend on the moving averages? The answer is, well, not really, because you notice the 21 and 50-day moving average are trending lower, so they're bearish, they're heading down, and the momentum of them is also bearish. Only the 100-day moving average at this point is showing a bullish signal, remains below the 21, 50, and 100-day moving averages, which is not good. The 1 and 3 month momentum is negative, so it's below its price point where it was 1 and 3 months ago, and momentum algorithms, as this builds, will start to turn into sellers. Let's take a look at the charts and see if we perhaps, from the volume perspective, can find any hope that we're not going to retest those lows. Well, we'll notice the 6-month volume profile here on SPY is very clear in this established sell zone that we marked up here before. Now let's start to zoom in and see if we get a different picture. Let's go to the 90-day window, and what do we see? Still that red bar there showing the heavy volume, saying this is indeed a sell zone. Let's go to the 30-day. Any hope of anything? No. 30 days, you can see sellers above. What we want to do is find that red bar below the current price. So let's go down to the 10-day and try to capture this recent price action. And you'll notice that the sellers are actually above where prices went at the end of close on Friday. So right now, due to the volume, is telling you the most likely path, given all the breadth indicators, momentum indicators, that we're probably likely headed down back to this 432 range, or at least down to 440 to retest some of this buying down here to see, well, if there's any hope. All right, let's go on. So no meltdown for the S&P 500 in the cards. Let's go to the Nasdaq 100. Maybe tech stocks will give us some better picture with Amazon's earnings last week, obviously helping QQQ. But let's start with the percentage of Nasdaq 100 stocks above their 50-day moving average, seen at a bearish 24, but starting to trend higher here And you'll notice when it gets down to this -2 standard deviation or below and starts to trend higher, that's positive. So perhaps an early look that there is a massive oversold condition in the Nasdaq. Let's go over to the percentage of Nasdaq stocks above their 200-day moving average, sitting at, again, a very bearish 37%. But notice how it came up from this -3 standard deviation, got rejected at -2, suggesting that perhaps this move higher isn't that strong at all. Let's go look at the historical reference. And when it doesn't shoot higher here, it tends to languish and maybe even come down and revisit these recent lows. So look for perhaps another move down in the Nasdaq based on these breadth indicators. Let's take a look at the relative strength indicator. Same story as S&P 500. Went from oversold, couldn't get through 50. Now it needs to get through 50 to really validate this trend, and it's not, again, suggesting perhaps another retest of 14,000 coming on the Nasdaq 100. Let's take a look at MACD. We have a crossover here, but not a real strong one. Notice how the short-term moving average in black is not really getting a massive liftoff, and you can see in previous bottoms where it kind of shot a little bit higher. You'll notice this one's kind of weak, though not a lot of confidence in the MACD, but so far RSI says no, breadth indicators say no. MACD's our only hope. How about Momentum Timer Pro? Well, it's got a solid no. So out of the indicators, it's telling you Nasdaq more likely to come down. Let's take a look at the moving averages here, and we see all 21-day, 50-day, 100-day, all bearish, so trending down. Momentum of them is trending lower, and weak, we notice it's below all the key moving averages from 21, 50, and 100. 1, 3, and 6 month momentum remain negative. Keep in mind with the 6 month momentum, this is a key area for a lot of momentum algorithms, a lot of strategies that follow traditional momentum, and at 6 months you'll see them start to sell. Let's head over to the charts and see if the picture gets any better. And what do we see? We see it came down through its 50-day moving average, through its 100-day moving average, and right now, if you notice, the 50-day is curving lower. It's below the 200-day moving average, very bearish. The S&P 500 slightly is above its 200-day moving average, so we can see that the Nasdaq is clearly in bear territory. It came down to this buy zone, found buyers, and right into a sell zone. And guess what? Found sellers. So what is the likely direction here? It's a retest of these lows on QQQ is what this is telling us. You'll notice the 6-month volume profile is above. Let's take a look at the 10-day. And 10 days below, so there's your picture for the Nasdaq is a likely retest of these recent lows to see if buyers are still there. A little more optimistic picture than we saw on the S&P 500. You need to look at the 30-day volume profile. It's down there too. How about the 90-day? Probably don't need to go out that far. It's way above here. So there is some indication that the Nasdaq is likely to retest these lows, find out if there's still buyers here at this buy zone. So path of least resistance right now, given all the indicators, says Nasdaq also likely to head lower. Let's take a look at small caps. Remember, small caps lead the large caps. We'll start out with we got the Russell 2000 here, and at a very bearish breadth at -2 standard deviation on the 50-day moving average. Only 21% of the Russell 2000 is above their 50-day moving average. So it's very bearish. Now, but still not giving us a clear picture. We want to see this thing shoot off of here, and it's languishing here. That's not what we want to see. Let's take a look at the percentage of Russell 2000 stocks above their 200-day moving average, which is at 29%. And historically, this is a massive buying opportunity, but there's no liftoff here. You're not seeing this surge higher, which is what you want to see. So let's look at historical context, and you'll notice that when it gets down to these levels of the 30, even below, or 20 and 40, you'll notice these are nice buying opportunities. They've been in the past, suggesting that perhaps there is some structural weakness here. And so looking at these pictures so far tells us the Russell 2000 is actually likely to unwind some of this big gain from the pandemic. Let's go on to the RSI, and we see it went from oversold and all the way up and didn't even get to 50. Now look, before, back in December, it was oversold, and so this would have given you an early signal to buy, and price went up. And then what happened? It didn't get through 50, got rejected, and then it tried it again, didn't get through 50, price went up, and then it came back down. So right now, RSI is telling you weakness in small caps. How about the MACD? Well, you have a very weak crossover here that, if this doesn't hold, could validate that all the other signals are telling you that small caps are headed lower. As small caps head lower, Well, guess where the large caps are headed? They're going with it. How about Momentum Timer Pro? 20 consecutive days on its signal saying sell. So it said, hey, this is not where you want to be if you're a short-term trader. So it's validating the other signal saying this is not a buying opportunity for the small caps. How about we take a look at the major moving averages? Bearish signals across the 21, 50-day, and 100 on price. Momentum is obviously trending down too, saying that the picture on Russell 2000 here is bearish. Below 21, 50, and 100-day moving averages, all the momentum signals are negative, meaning it's below its 1, 3, 6, 9, and 12-month price point, telling you that momentum algorithms are going to be looking to exit those positions, and that is not a bearish picture at all. That's not a bullish picture. It's very bearish. All right, let's take a look at IWM here, and we'll zoom out to, all right, we're already on the 6-month chart, and what do we see? Prices above here at 222. We know the sellers were up there. Let's go out to the 1-year chart. You can clearly see all that time I said this was likely a topping pattern, and turned out, well, it is. All these people that were buying in here are now underwater. And where does this tell us? Let's go to the 10-day window, and 10-day is above. So that tells you there's mega weakness here in the Russell 2000. Let's go to the 30-day. It's above. So as far what we're seeing here is not only is it crossed through its 50-day moving average, reconfirmed the bottom side, which is a bearish picture. It's gone through its 200-day moving average in tan, and it's below that. It's below all the moving averages, trending lower, and that tells us where is Russell 2000 going? Well, the reality of the story is you see this volume here. The next destination is actually close this gap down here into 160. So if you look at IWM, that's where it's likely headed. So overall bearish picture for the market. So if we're looking for a melt up or a crash, well, right now, at least crash in small caps, lower in tech stocks, probably lower in the S&P 500 as well. And that, well, certainly not a melt up. All right, I'm Steve Van Metre. Thanks for watching. Bye now. The content of this video is provided as educational information only. It's not intended to provide investment or advice. It's not to be construed as recommendation or solicitation by some security, financial instrument, or to participate in any particular trading strategy. This video was prepared by Steven Van Metre. Personal capacity, opinions expressed in this video that do not affect the values of Financial Advice Inc. or Steven Van Metre Financial.